Hello, good morning, ladies and gentlemen. Happy New Month to everyone in the house. Hello, good morning, ladies and gentlemen. Let's confirm that we are good to go this morning. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get this started. I would like to see some feedback, please. If you can see my screen and you can hear my voice, please type in hi in the comment section so that we can get this started. All right, 435. Good morning. Thank you very much for that confirmation. Hey, Vivi, how are you doing this morning? Happy New Month to you. 4601. Good morning. Hey, Carrie, how are you doing this morning? Good morning to you. Jawi77, thank you. Good morning to you too as well. Hey, Jawi wants us to treat GBPJPY. All right, so I will be including that into our plans for today. Then Susaini. Good morning, Susain. I hope I pronounced your name correctly. All right, so I would take this as a positive feedback this morning that we are good to go. I'm so excited to welcome you to the first Extra Speed live session for the month of April, and on that regard, I wish you a happy new month. My name is Sharif Daramola, and for the next 1 hour, I will be your host as I will be taking you on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities for us during the New York session today. And for those who are joining us for the first time, you are highly welcome on board. I'm really glad to have you around with us. So what we simply do here on a daily basis is to gather here as a family, evaluate the financial market using technical parameters, identify trading opportunities ahead of the New York session. And on Monday like this, we have the privilege of throwing in whatever financial instrument you want us to be monitoring for this week. And obviously, I will be putting it into my plans for the week too as well. And this will be a platform upon which we'll continue to monitor this price action throughout the course of the week. Thank you for coming in. I advise that you stay tuned in so that you get to understand how this works, and I assure you that with time you get to be able to use the information you have gathered here to make your individual and independent decision on this pairs. So once again, you are highly welcome on board. So on that note here, let us dive into the business. And as usual, the first thing we normally do whenever we kickstart the day is to keep tabs with the fundamental perspective in the market. That is, we want to be looking out for macroeconomic events that will be affecting the commodities or the pairs that we are monitoring for the day or for the week. And we all know that from it, whenever we have these technical positions identified, we still need some catalyst to come in to drive price movement. And without this catalyst, price will not move significantly well. Hence, we will not be able to scoop in profits as expected. So let's run through the economic calendar here and see what to expect for today. So for today, April 3rd, Monday morning, we have the ISM manufacturing PMI. So this is a manufacturing index which shows the business condition in the US manufacturing sector. It's a significant indicator of the overall economic condition in the US economy. And you would agree with me that this is an high impact event we want to be looking forward to. And if you look at the data that we have here, the previous data came in at 47.7, and there is a consensus projecting a 47.5, which is a little bit lower than the previous data. So we are going to be looking forward to see if the actual data coming in today will be as expected, below expectation, or above expectation. And one thing I would like to also let you know here, that any data coming in below the 50 is actually a negative figure, negative data for the US economy. So at this point in time, it's still looking a little bit negative anyways on that one. Then yesterday, I think on Sunday, there was this OPEC Plus meeting, which I told us all last week that we shall be anticipating the OPEC Plus meeting. And from the outcome, we had an unexpected move ahead of the Monday ministerial meeting. And the OPEC Plus members decided and pledged to cut oil production. And when we sum the total of this oil production cut, it dovetails to about 3.66 million barrels per day. That is a whopping 3.67% of the total global demand. And with this kind of development, there is a high chance that the US oil price might jump for about $10 per barrel this week. This is a projection which majority in the market are leaning towards, and we are beginning to see the reflection of this. Market is beginning to react in that regard, and as you can see on the US oil, we had a huge bullish gap this morning. So with that being said here, let's dive into the market structure so that we can position ourselves ahead of the New York session. So the first thing we are going to be doing here this morning is to review the USOil chart. So here we are on the daily time frame on the US oil, and the first thing you will observe on this chart is the fact that price action has been bearish on the US oil. And if we go to as far back as the month of June last year, you can see our price action had continued to find lower highs in this market. And when we connected the series of lower highs, we had this bearish trend line figured out at this point. And with the situation we have here, it is obvious that price action has been bearish. But things got a little bit interesting during the month of November here, as you can see how price action was caught within this channel between the $82 level and the $70 area to further emphasize the indecision at that particular point in time. However, during the month of March, we saw how price action broke down to significant structure. We saw this impulsive move during the month of March, breaking down the key structures. We had one breakdown of the the bullish trend line here. We saw the bullish trend line broken to the downside here. That's the first one. Then we also saw the breakdown of that support line at the $70 level, and to emphasize a strong bearish move to the downside. And I was of the opinion that the breakdown of this sudden impulsive move to the downside was as a result of the banking crisis which gripped the US economy. And you all know that when the banking sector is affected, it normally does affect the prices of commodity, as the banking sector is expected to be funding the buying and selling of this commodity. And we saw that huge price drop to the downside. And one thing we noticed is as soon as price got into that $65 level, we begin to see buy pressure resume in this market, and we were lucky enough to be part of this buy move as we enjoyed that bullish momentum all the way to the upside during the course of last week's trading session. And with the situation here where price action was approaching the structure that was broken last month as at the $76 level, you can see we had the breakdown of the structure here. Price action approached this area, and from a technical standpoint, we should be expecting that price will retest the structure to incite another wave. But what we have seen here, considering the latest development from the OPEC Plus member, we have seen a huge jump in price as we saw a 48 pips bullish gap at the beginning of today, which is a sign that there was trading transactions during the course of the weekend which pushed price to the upside at this point. So with the situation we have here right now, what are we going to be doing? What is it that we are going to be doing in order to be able to take advantage of a trading opportunity. So we already have a bullish gap here. So what I will be advising us to do here is to scale down to a much more lower time frame, as we want to see how price action has reacted to this bullish gap during the early hours of today. And one thing for sure here is that if we are going to be looking at this breakout of the $76 level from a technical standpoint, we might likely see a retracement back into structure, where the appearance of buy pressure could incite another wave of bullish momentum to the upside. That is one perspective to this, and another perspective is we could have a situation where price continues to the upside, where we might see a trend continuation pattern here on our lower time frame, breakout retest to incite another wave to the upside. So these are the things we are going to be looking forward to when we scale down to a much more lower time frame. So in that regard, let's scale down to a much more lower time frame. First of all, I think I had something on the 4 hours time frame here before we go into the details on the 1 hour time frame. So on the 4 hours time frame, I took into consideration trading activity since the second week of the month of March. And if you look at the structure, it was initially bearish throughout the course of the month of March. As you can see, the bearish trend line connecting the series of lower highs is very evident of this bearish momentum. However, during the course of last week's trading session, we saw the significant breakout of the bearish trend line here to give us a signal that the trend line no longer has the capacity to hold this bearish momentum. And since then, price action had continued to find higher highs and higher lows in this market, hereby transitioning into something that looks more like an ascending channel. Now that we already have the breakout of the resistant line of the ascending channel here, which lines up exactly with the $76 level, which we acknowledged on the daily time frame, are we going to see price action retrace back into the structure to retest the structure in anticipation of another wave of bullish momentum to the upside? Or are we going to be seeing a trend continuation pattern on our lower time frame to incite that move to the upside from that area? So to answer this question, we will be scaling down to a much more lower time frame, which is the 1 hour time frame. And on the 1 hour time frame, we get to understand how participants in this market has been reacting to the bullish gap that was identified here during the early hours of today. So we have the situation here. We have the bullish gap, which I acknowledge here. So it's a 48 pips bullish gap, quite a huge one. And then as soon as we saw our price started the week at around the $80.50 level, we saw the support line for the week at the $79 area. And what do we see here is a beautiful flat channel where price action appeared to be trapped between the $80.50 level and the $79 area, at least in the last 12 hours. So with this situation here, we all know what we look out for whenever we identify this kind of simple flat channel. All we need to do at this point is to remain patient and wait out for a signal in the form of either a breakout of the resistant line of the channel at the $80.50 level for buying opportunities, or the breakdown of the support line at the $79 area for selling opportunities. And with the situation we have here, this consolidation phase here has a tendency of transitioning into either a trend continuation pattern or a reversal pattern at this point. So let's quickly run through what our expectations will look like on this one. So with this situation here, I have a buy stop order sitting above the $80.50 level, where a breakout of that structure will make this pattern turn to be a a trend continuation structure, a retest of structure, giving us further confirmation of the strength of the buyers in this market. So we are looking out for buying opportunities right above the $80.50 level. Now, like you all know what I do whenever I analyze the market, I also want us to keep the option of a movement in the opposite direction of our expectation. So personally, I'm expecting a bullish momentum here, considering the bullish gap here and considering the OPEC Plus decision during the course of the weekend. But because of the situation here, there is a high chance that we could have price action retrace, do some retracement. Obviously, I showed you on the 4 hours time frame where price action broke out of this significant structure at the $76 level, which also shares a confluence with that resistant line of the ascending channel. And from a technical standpoint, when price action breaks out of a key structure like this, we expect that one point in time price is likely going to come back, retest the structure in anticipation of a trend continuation to the upside. So if a retracement phase is going to come in here, then price will be breaking down the $79 level here. So what we are going to be doing here is, if price action breaks down the $79 level, we want to see further confirmation. So we shall be scaling down to a much more lower time frame, probably your 15, 10 minutes or 5 minutes time frame. Look out for retest of structure which further supports this bearish momentum to the downside. Then we could join that move all the way to the downside with a TP target sitting somewhere just right around the resistant line of the ascending channel and the $76 area, where we shall be looking out for buying opportunities here to join that trend continuation to the upside. But if price action breaks down structure, then we would have no choice than to look out for selling opportunities. Now, there is one thing about this breakdown of the $79 level which I would like to emphasize here, and that is, if for those who are not comfortable taking counter trend opportunities, I would advise that you stay clear of the breakdown of the $79 level. And because of the reason why I've said this is this: if we are selling below the $79 area, this is more or less seen as a counter trend opportunity, as you would need your utmost attention whenever you are taking such position, as we want to be moving our stop loss accordingly to secure the current position as price action moves significantly in our favor. So as price drops significantly to the downside, we definitely want to be securing our position by moving our stop loss accordingly. So that is how we are going to be taking advantage of the counter trend opportunity here. But if you are not a scalper, you're not comfortable taking counter trend opportunity, I would advise that you stay clear and hold on for price action to come into this bust up here, where we want to be looking out for buying opportunity to join a trend continuation to the upside. So that is how we are going to be trading the US oil for today. And if price does not drop to the downside, that is, price does not break down the $79 level, retest of that structure, and instead it continues to find higher highs, then we shall be anticipating the breakout retest of the $80.50 level to join that bullish momentum to the upside. So it's a very simple setup we have here. So I implore that we be on standby to catch any of this opportunity that could happen during the New York session today. And if you do have any questions, feel free to drop your inquiries in the comment section. And you might also want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on the US oil. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions for me before I move on to the next pair. All right, so in the absence of no questions, we'll be moving on to the next pair. So the next option we are going to be looking at this morning is the US tech. So on the US tech, we shall take an holistic point of view. First of all, by diving into the daily time frame to look out for key structures and to see how price action had been playing out. So on the daily time frame here, if we look at this structure here from what has been happening in this market since last year, it is quite obvious that price action has been bearish. And to further validate the bearish momentum in this market, we can see the connection of lower highs here. When we connect the series of lower highs, we have this bearish trend line, which further emphasizes the strength of the sellers in this market. However, during the early days of this year, we saw how the bullish momentum spring out of that demand zone at the 10,500 level, as you can see here, and price action continued to find higher highs, breaking out of that bearish trend line, which also shares a beautiful confluence with that $12,000 mark, to give us a signal that buyers are gradually gaining momentum in this market. And since the month of December last year, we have price action transition into a structure here that looks like an head and shoulder pattern. And during the course of last week's trading session, we finally saw the breakout of the $12,800 level with an engulfing bullish candle, taking out the sell position around the 12,800. And prior to that breakout last week, I told us all how that $12,800 level has been a strong selling niche in this market. And if we go to as far back as the month of September, we saw selling pressure here. In the month of February this year too as well, we saw selling pressure around this area. And prior to that breakout, we saw how sellers were trying as much as possible to negate this bullish attempt. But fortunately for the buyers, this was witnessed during the course of last week's trading session, as we saw price action did a final breakout of that bullish of that 12,800 level. Now, with the situation we have here, with the breakout of the 12,800, are we going to be seeing price action continue in such a way that it's the resistant line of the ascending channel, which falls around the 13,800 probably? Or are we going to be seeing price action retrace back into the structure that was broken? You know, from a theoretical standpoint, whenever we have a breakout of a structure like this, we expect that one point in time price may likely come back to do a retest of that structure in anticipation of a trend continuation to the upside. So these are things that we are going to be looking at when we scale down to a much more lower time frame. So for today, we are going to be focusing on the area around the 13,200 and the 13,100 area to see how price action is reacting to that level since the early hours of today. So this will give us a clue into what our expectation should be like. Is it going to be a retracement into the 12,800, or is it going to turn out to be a trend continuation pattern that will slice through the $13,200 area to incite the second wave of that bullish momentum? So in that regard, I want us to scale down to I think the 4 hours time frame. First of all, I think I saw something on the 4 hours time frame, I guess. Okay, so on the 4 hours time frame, this was what I was able to identify, and taking into consideration price actions activity since the beginning of the month of March, you will see how it has been on a bullish momentum, and this ascending channel here further emphasizes that. But the situation we have here right now, let's scale down to the 1 hour time frame, which will give us a better perspective into what is happening. So when we scale down to the 1 hour time frame to see how participants in this market has been relating to this current market structure following that impulsive move last week to the upside, you will see that the week has started on a bearish note, though caught within a channel. As you can see, price action started at around the 13,150 level, dropped into the 13,070. We saw buy pressure resume around this area, and in fact, price has been caught within this channel for the last 12 hours. So from the look of things right here, it's more or less of a sign that there is an indecision in this particular market, as participants are still trying to test water to decipher where price action will likely be going for today. And to further buttress the indecision in this market is the anticipation of that macroeconomic event we are looking forward to today. That is the ISM manufacturing PMI, which will be coming up in 2 hours 30 minutes from now. And so definitely key players will be looking forward to this event, hence liquidity will be withdrawn from the market. And when liquidity is withdrawn, we obviously going to be seeing structures like a consolidation phase like this. Now, with the situation we have here, we all know what we look out for whenever we identify something as simple as this kind of channel. We want to remain patient. We want to look out for signals, which definitely will come in the form of either a breakdown of the channel at the $13,070 level or a breakout of the channel at the 13,150. So if a breakout of the 13,150 happens, then this whole consolidation phase here will turn out to be a trend continuation pattern to the upside. Then we want to be part of this bullish momentum going forward. However, if price action drops below the $13,070 level, breaking through the support line of that flat channel there, then we will have no choice than to get ready for a retracement phase in this market. You all know that we have been witnessing a bullish momentum since last week's trading session, and you would agree with me that a retracement at this particular point in time is long overdue. So if a breakdown of the $13,070 level happens, we want to be identifying where price action may likely hit before another wave of bullish momentum will happen. So what I will be doing here is to bring out my Fibonacci retracement tool, run it through the previous impulse leg here, which lasted all the way into the 13,200 level, and we shall be aiming at an area between the 50 and the 78.6% as a TP target zone for sellers in this market. Personally, I will be tending towards a bearish momentum for today. So let me label this area for the sake of clarity. So we have this area as a TP target for sellers, and this area will also be serving as a potential buy zone if we start seeing reversal pattern appear on the lower time frame in this from this zone here. So let me place this in the middle of this and give this a yellow color so that we can see things more clearly here. So if price action breaks down the $13,070 level, I will be looking forward to price dropping to as far as this zone here before another wave of bullish momentum may happen in this market. So let's be on standby for that. I'm tending towards a breakdown of the 13,070. So that is what I'm expecting. I'm expecting price to drop to the downside. And if price continues to drop to the downside, remember that we have a key structure here at the 12,900, where a further breakdown of that structure too will be welcoming additional position to our existing trade. So let's be on standby for this one. But in as much as we're looking out for selling opportunities, we would not ignore the potentials of the buyers here. So a breakout of the 13,150 also will be the beginning of a trend continuation pattern. So we shall be having our buy stop order just right above that level. So this is what we are going to be looking forward to today on the US tech. And one thing I would like to state here is that things might look a little bit slow for today, being the fact that first of all is the first trading day of the new month, the first trading day of the week, and there was quite a lot of fundamental development that happened behind the scenes, from the oil, from the OPEC Plus decision to the Fed's rate hike decision for this week, and the NFP2 coming up this week. And we also have other major macroeconomic event coming up, and price action might likely be going through a long consolidation phase before we start seeing any traction resume in this market. So we don't want to be surprised, so I want to let us know this beforehand so that we are not going to be too tense that price is not moving as expected. So things might look a little bit slow during the first half of this week, so we should also anticipate that possibility too as well. So with that being said here, if you do have any questions, feel free to drop your inquiries in the comment section. So we'll be moving on to the next pair. While I check the comment section from time to time, I can see Cast comments. Cast is asking, how is it good day for Euro USD? I'm not sure that statement looks comprehensible, but I will assume you are asking me to do something on the Euro USD, I guess. Okay, let's see how that works out with time. If there is enough time, I would incorporate it into our plans for the week. All right. Okay, so we shall be moving on to the next pair right now, and for the sake of this, can I take the GBPUSD or I take the XAUUSD first before I go into the GBPJPYs? Okay, since I'm doing GBPJPY, let's take XAUUSD first of all, and then we shall be treating the GBPJPY next. So on the XAUUSD here, this is the daily time frame. So I have not done any adjustment to the structure I shared with you here last week and during our live session last week. So the daily time frame still looks the same as what we had last week, but I have a little tweak into the structure. So the first thing we have here is price action on being on a bullish momentum. Obviously, as you can see, price action found higher highs and higher lows, and as a result of this, we have this ascending channel figured out, and this has lasted for over 6 months now, I guess, as in since October, November, December, January, February, March, April. So it's about 6 months now we have been seeing this strong bullish momentum in this market. And now when we look at what happened during the course of last week's trading session, we saw how price action was a little bit choppy ever since it tested the $2,000 area. And remember, I told us all here at that moment price action is the $2,000 mark, I think a couple of weeks ago. I told us all that it will still take some time for price action to acclimatize with this zone around the $2,000 area, and this is simply because we have a new high at this point, and this is the first time price action will ever test that $2,000 area. So it will take some time for price action to actually acclimatize to this area before a bullish momentum comes in. And this will result in scenarios such as retracement phases, consolidation phases, to gather some momentum to break out of that $2,000 area. And if you look at what happened last week and even a couple of weeks ago, you will see that since the retest of the $2,000 area, we have been seeing selling pressure resume as soon as price tested the $2,000 area, where sellers appear to be negating all attempt by the buyers to break out of that structure. And this is driven by fear. Actually, it's the first time prices get into that area, and majority don't want to get trapped in that area, so they will quickly sell whatever they have made so far, sell to make some money off whatever they have made and to see how price will be reacting to that structure. And with the situation here, we have been seeing a choppy situation around here, around the 1,960, and I'm of the opinion that we might likely be seeing price action do a retracement, as in if we look at the previous impulse leg here, there is a likelihood that we could see a retracement where it would reflect profit taking activity back into structure before another wave of bullish momentum will happen. So that is one perspective to this. Then another thing to this is that it could turn out to be a trend continuation pattern where a breakout of structure will welcome another wave of bullish momentum in the market. So with the situation we have here, when we scale down to a much more lower time frame, we begin to see what structure price action is evolving into around this area. Now in that regard, I want us to scale down to the 4 hours time frame, where I was able to identify a structure here that looks more like a pennant. And if you look at the 4 hours time frame here, this is where the buy pressure resumed. Just at the beginning of the month of March, you saw the accumulation happen there before price action springs out of that area. And look at what happened as soon as price got into that supply zone. At the $2,000 level, we begin to see lower highs. And if we connect the series of lower highs there, we have this bearish trend line. Then throughout the course of last week, we saw a higher lows. But one thing about this structure is that price buyers were unable to find a new high. As you can see, we had lower highs here, so hereby giving us a beautiful pennant channel. And one thing about this pennant channel is that whenever we sight this kind of setup, we want to be very patient in order to before making a decision here. And our patience will look forward to either a breakout or breakdown of this channel. So we could either see price action breakout of that bearish trend line to give us a clue of possible bullish momentum this week, or we could see price action break down the support line of that pennant channel for a potential selling opportunity for this week. And it appears we already saw a breakdown of that support line of that ascending channel during the early hours of today, and we are still looking forward to see if this breakdown will become a valid one, as we expect that price will at one point come back to do some retest of structure before another wave of bearish momentum will begin. So what we are going to be doing now is to scale down to a much more lower time frame so that we can see how participants in this market have been reacting to this current structure. And to do that, we shall be scaling down into the 1 hour time frame. Now, when we scale down into the 1 hour time frame, you will see how price action has been trading since the beginning of this week. So we can see the situation here where price action started at around the 1,971 level, which happens to be the resistant line for the week, and this is the highest point price action has ever been for this week. Then we had some buy pressure resume around the $1,957.50 level before the breakdown of that structure happened. And immediately I saw the breakdown of the $1,957.50 level, I was of the opinion that this could probably turn out to be a bearish signal. And one thing about the breakdown of the $1,957.50 level is the fact that it also breaks down the support line of that pennant channel we identified at the beginning of this analysis. So with the breakdown of structure, what I did next was to bring out my Fibonacci retracement tool, run it through the previous impulse leg that saw this bearish move to the downside, run it through that area, and you all know what we look out for. We look for the golden zone area, which falls within the 50 and the 78.6% of the previous impulse leg. So I will do some readjustment here. So we have a sell window just right around this area. And so with the situation we have here with the sell window around this area, what are we going to be looking forward to? Well, personally for me, I will be looking forward to a bearish momentum for today. But if the contrary happens, we will also be on standby to catch that move. But since we are looking out for bearish momentum here, what is our expectation? What do we want to see with this within this current structure to give us that confirmation to sell the XAUUSD for today? So like we have seen last week, we saw this impulsive move which continued into the early hours of today, and we saw price action hits the 1,950. We saw buy pressure resume, which I'm of the opinion that this is more or less a retracement of that previous impulse leg. And within the sell window here, which happens to be between the 1,969 and the 1,980 area, I want to see a reversal pattern appear around this area. It could be a double top structure. It could be a head and shoulder pattern. Let's look out for reversal pattern, breakdown, retest of our reversal patterns neckline. Then we could join the second wave of that bearish momentum to the downside. So this is what we shall be looking forward to around this area, and this could take about 3 to 4 hours before this structure will mature. And since we are having a macroeconomic event coming up later on today, we are going to be watching to see how participants in this market will be anticipating this event and how it is going to be reacting after the event. So let's be patient here and wait out and see how price action will react within this zone that we have identified here. So this will take about a couple of hours to happen. So let's remain patient here and wait for a pattern to mature before we want to be joining any bearish momentum to the downside here. So that is that on the XAUUSD for today. And there's another thing I also shared on my public platform this morning. So when I scaled down into the 30 minutes time frame, I was able to identify a simple setup here on the 30 minutes. Hold on a second. Okay, we saw this happen. I'm trying to, okay, let me delete this one first of all, and let's see. So this is what I saw here on the 30 minutes time frame. I saw this bearish trend line, and I had this 1,965 level to guide trading activity. So I said if price action trades above the 1,965, we'll be buying at that point, and if price drops below the 1,965, we shall be selling at that point. Now look at what has happened here. Price action has broken out of the 1,965, broken out of the trend line here. So one thing we are going to be doing, this is a signal. We want to see if this is a true breakout or a false breakout. So the only way we can know it's a true or false breakout is to see if there will be a retracement back into the structure. If a retracement comes back into the structure and what we see here turns out to be buying pressure right on our lower time frame, a double bottom structure, then this will be confirming that that breakout is valid. But if price action, instead of retracing to find buying pressure above the structure, if it drops down below the 1,965 and instead start finding selling pressure right below the structure, which would also have respected this bearish trend line, then we will be in for a sell momentum in this market. So let's be on standby to catch any of this opportunity when they finally happen. So you want to screenshot my screen, you can screenshot this one right here, as we shall be using this to guide our trading activity going forward. So that is that on the XAUUSD for today. If you have questions, feel free to drop your inquiries in the comment section. So let's go in on the GBPJPY, which was introduced to us by I think XAUUSD77. I hope XAUUSD is still on the house. If you are around, just say hi so that I know that you are around. So we are going to be looking at the GBPJPY right now. So the first thing we're going to do here is to scale up into the daily time frame. And on the daily time frame, what is the first thing we are going to be observing here? Now, if we look at the structure here going to the last quarter of last year's trading session, you would obviously see that price was found in lower highs at one point. And what we want to be doing is to connect the series of lower highs first of all. And when we do that, we are going to be having this bearish trend line that you can see on my screen right now. So we have connected the lower highs here, and another thing you will notice here, despite the fact that we have in lower highs in this market, you would notice that price action was finding it difficult to find lower lows here. So it tells us that buyers are gradually gaining some momentum. So when we connect the series of higher lows here, we have this bullish trend line at this point. And so what this simply tells us is that we might be in for a reversal pattern in this market. So now with the situation we have here right now, we have already seen a key level we shall be using to guide our trading activity for today, which is going to be falling between the, I think, the 164.00 area, I guess. Okay, I think it's the 164.0. So I will map that out right now, extend it out a little further so that we can see things more clearly here. So we have the 164.00 level. Okay, a GBPJPY, I can see. All right, that's beautiful. All right, so let me know if you don't understand anything here, so I will be able to expatiate further for you. So we have the 164.00 level figured out here, so we shall be labeling it and placing it right at the top right hand side of our screen. So I will give this one a green color, so things will get a little bit clearer when we bring back our candle chart right now. But before I do that, I also want to acknowledge this demand zone here, which has been very strong since the beginning of this year. So we can see we've been seeing bullish momentum since the beginning of the year. So we have the demand zone figured out here. So I always like to give this a white color placed right inside that box, and then I give this a darker color. All right, so we have a demand zone just right around the 156.00 level. So things will get clearer when we bring out our candle chart right now. So you can see things right now. So we have, let me extend this up a little bit. So we have something like this right now. So we have a beautiful reversal pattern gradually unfolding before our eyes, and we have a neckline of that reversal pattern sitting exactly along the 164.00 area, which has been a strong determinant of price action since the month of November last year. And this has also led to the breakout of that bearish trend line, which for me at this point is a beautiful signal that the trend line may no longer be strong enough to hold this bearish momentum to the downside. So what we are going to be doing right now is to wait for this confirmation to happen. So if you had missed this trading opportunity right above the 162.900 level, well, we need to be very patient for further confirmations to happen at this point. So now we have the breakout of the bearish trend line at this point, and for further confirmation from a technical standpoint, we expect that price will at one point probably do a retest of structure. It might not happen, it's a possibility, and by pressure above the structure, we'll be welcoming additional position here. So with the situation we have here, understanding the fact that bullish momentum is gradually coming in this market, so how do we intend to take advantage of the trading opportunity this week? So what we are going to be doing right now is to scale down to a much lower time frame to see how price action has been reacting with this neckline area since the beginning of this week. So what we are going to be doing now is to scale down to the 1 hour time frame. So let's see what has been happening here since the beginning of today. So we shall be zooming right into, okay, first of all, I want us to look at the 4 hours time frame. I think I saw something here which will be of major assistance in helping us to guide our trading activity today. So we have higher lows identified here. So what I will do is connect the series of higher lows. So we shall be giving this a green color to emphasize a bullish momentum which started on the, I think on the last trading, I think last week of last month's trading session, we saw this bullish trend line began here. So this bullish trend line here that we've just identified will be our yardstick for trading activity for this week. And what this simply means is that if price action continues to trade above that bullish trend line, we shall feel comfortable buying the GBPJPY. But if price action breaks down that bullish trend line, then we might likely see price action going down to retest the bearish trend line here that was broken last week. Remember, this is the bearish trend line we identified on the daily time frame. So we might likely see price action drop into the trend line to incite that move to the upside. So we are going to see that too as well. But if price action remains above the bullish trend line, then we might be in for a buy opportunity this week. So let's look at the 1 hour time frame to see how our participants in this market has been reacting to the structure. So let me zoom this out a little bit and bring the 164 into our purview so that we can see things more clearly. So I'll be doing some readjustment to that 164 level so that it will be able to, we could be able to, okay, so this is the 164. So please, let's take note of this. And since the beginning of this week, we have seen our price, we saw where price started the week. It started the week at around the 164.400 level, which I will be using as my, I'll be giving a blue color and label it 164.400. okay, make the font a little bit smaller so that it won't obstruct our structure. Then we have the support line for this week somewhere around the 163.450, I guess. Yeah, 163.450, another psychological level there. So I placed it at the bottom right hand side. So we have this. Now that we have the situation here figured out, we have already seen price action break out of the 164.00 level, which happens to be the resistant line for this week, which is a beautiful signal that we are going bullish for this week. Then in addition to this, if we take into consideration what happened on Friday, you will see our price was finding lower highs. So I will connect the series of lower highs here, and I will make this a little bit thinner. And you can see, so this is more or less a further tool that we are going to be using to guide our trading activity for today. So now that we have the structure figured out, this is the 1 hour time frame, and on the GBPJPY we have three structures that we shall be using to guide our bullish momentum this week. So the first structure is a resistant line here at the 164.400, which has been broken to the upside. The second one is the bearish trend line here, which was supporting bearish momentum since last week Friday. And the third structure is this bullish trend line that we identified on the 4 hours time frame. So going into the new week right now, if you are taking advantage of the bullish momentum here, well done to you for being on standby to have caught the breakout of that channel. But if you had missed out on that opportunity, well, I'm of the opinion that there is a tendency of price action coming back to do a retest of this trend line at one point in time, or probably go as far as retesting the 164.400, which is the resistant line for the week, which also shares a confluence with that bullish trend line that we identified on the 4 hours time frame, which might snap out to be this beginning of the second wave of this bullish momentum. So that is what we are going to be using to guide our trading activity for today. Then another thing about this structure is the fact that we could also have another opportunity to add more position if price action continues to find higher highs. Breaking out this key structure here had the 165 point, is it 200? Yeah, 200. So 165.200 level. So I will label that also so that we can use it as a yardstick for, okay, 165.200. All right. I hope this is very clear here. Don't get it twisted. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So we have the breakout retest of this structure here. So this is what we shall be using. So far so good right now. We are bullish on the GBPJPY and we anticipate price action breaking out of the 165.200 level to welcome additional position on this pair. So this is what we shall be looking forward to buy the GBPJPY today. However, I would like to state here that I always try as much as possible to be as flexible. The market is a fluid environment and anything could actually happen at any point in time. So we want to be as fluid as possible so that we can be part of any momentum that happen. So in this kind of situation here where we are looking forward to buying opportunity, we should also keep it at the back of our mind that sellers could also come in at any point in time. And we also want to identify what structure are we going to be seeing here that will make us change our views from this bullish expectation that we have here? Well, I told you all on the 4 hours time frame that we have a bullish trend line, which I identified earlier here. So we want to see price action break down that bullish trend line for us to know that, okay, it's time to get ready for a momentum shift. So if price action breaks down the bullish trend line here, this is a beautiful sign that price action is going the other way. But we are not jumping into conclusion right now, as it could turn out to be a false breakdown. Remember, we have buy pressure around this area. We have a support line here, so it could turn out to be a false breakdown where price will climb up, just shake out some people out of the market and continue to the upside. So we don't want to jump in right away if it breaks down. So what we are going to be doing is to remain patient and wait for a significant signal that the sellers are actually getting stronger in this market. So we are going to see something like a retest of the 164.400 level, which also shares a beautiful confluence with that bearish trend line, where selling pressure resuming below the structure on our lower time frame will give us a signal to get ready to sell the GBPJPY, and then breakdown retest will welcome more selling opportunities in this market. So this is what I will be looking forward to sell. So we are not selling unless a breakdown retest of this structure happens on the GBPJPY. So our perspectives remain bullish. Let's be on standby for more opportunities. And for those who are taking advantage of this move, you might want to move your stop loss, secure this current position as we wait out for more trading opportunities. So on this note, I would want to call it a day here. Hey Jawi77, I hope I made myself clear. Do you have any questions? Let me know. And while I do a quick recap on what we talked about so far today, especially for those who are not part of the beginning of the live session. So let's quickly run through the recap for today. So the first commodity we talked about today is the US oil. And the US oil, we have a situation here where price is trading just between a channel here between the $80.50 level and the $79 area. And I told us all that we have no other choice than to remain patient for a signal to happen, which is definitely going to come in the form of either a breakout or breakdown of this channel. Then we went on to talk about the US tech for today, and on the US tech as well, we also have a consolidation phase happening here. And I told you that I'm tending towards a bearish momentum here, but we are all going to wait for that breakdown to happen before we want to be joining this. So it's a simple flat channel. We either wait for a breakout of the 13,150 or the breakdown of the 13,070 to join any trading opportunity in this market. Then we went on to talk about the XAUUSD, which is the gold. And on the gold, we are still very patient here. We are looking forward to a selling opportunity in this market. We already have a sell window identified here. And I told us all that we are going to be waiting for a reversal pattern around this area for confirmations that sellers are getting stronger in this market before joining that bearish momentum to the downside. So we want to be on standby to catch that one as well. Then we went on to close the day with the GBPJPY, which was introduced to us by a Jawi77, and it told us that we should treat this. Of course, we have already analyzed this one too, and we are holding on to a bullish bias for this week, where we have 3 structures which will be guiding our trading activity for this week. So the first one is the bullish trend line, which we identified on the 4 hours time frame. Then the resistant line of that beautiful channel we identified during the early hours of this week at the 164.400. And then we have this bearish trend line, which has been supporting bearish momentum since last week's trading session. So we have said that as long as price remain above both the 164.400 level and the bullish trend line here, we shall feel comfortable in our buy position. And we are looking forward to adding more positions if price action takes out all the sell positions here at the 165.200 area to welcome more buying opportunity in this market. So that is how we are going to be buying the GBPJPY for today and for this week. However, I told us all to be open-minded of the potentials of sellers coming in. That is, if price action breaks down the 164.400 level and the bullish trend line there, then a retest of structure with selling pressure below this level on our lower time frame will be an opportunity to join a sell momentum to the downside. So let's be on standby to catch this move. So AJAW is asking, yes, it's okay, so we wait market bearish. No, you're not getting this right. What I'm saying here is this: we have a structure here. We are holding on to a bullish momentum here. Some of us will have joined this bullish momentum around this area, so we are holding on to a bullish bias in this particular market. So we are waiting for more buying pressure to come in. So on this chart here, I'm tending towards buying the GBPJPY for today. As you can see, we had a channel here figured out at the beginning of this week. We saw how price action was trading within this range here before the breakout of the resistance line happened. And whenever we have a breakout of a resistant line, this is a bullish signal for us. And coupled with the resistance line here is a bullish trend line for us here, which confirms that we are going bullish for this week. So what I said here is that we are going to be buying the GBPJPY, and that if you had bought the GBPJPY above the 164.400 level, you want to be moving your stop loss to secure your current position. And you are thinking of adding more position if price action breaks out, reaches the 165.200 level. There you can add more buy position to your existing trade. Now, I said if price action does the opposite, that is, if price action breaks down the bullish trend line, then we might be in for a momentum shift. So what I said here is the only reason why we are going to be selling the GBPJPY today is if price action ever breaks down the bullish trend line here, breaks it to the downside. And I told you not to get too excited to join right away, as you need some confirmation to happen in the form of a retest of the structure where selling pressure resumes below this level. Then you can join the bearish momentum to the downside. So that is the only way we are going to be selling the GBPJPY for today. I hope I made myself clear. All right, AJAW. All right, I'm pleased to that you understand. You can also screenshot my screen, screenshot it, and then you can observe it yourself and look at it critically. So we are only going to be selling if price action breaks down this 164.400 level to the downside. So I've already identified that there. So let's be on standby for this. Screenshot it and use it as your guide for your trading activity today. So that is that on the GBPJPY, and I hope I made myself clear, and I'm very sure that we are all prepared for the New York session today, as I was able to simulate all the possible scenarios that might likely happen during the New York session today. All right, guys, I wish you best of luck during the New York session today, and hope to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs that we are monitoring so far has been doing, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.